Being said, if you're new to our YouTube channel, make sure to like, subscribe just below this video here. You're going to see a little bell, looks like the Taco Bell bell there. Click that. Every time we upload a video, it'll send it directly to your inbox. That way you can stay connected to the videos that we put out. So in today's video, I'm going to be discussing crude oil trading, but more specifically trading options on crude oil to give you guys some insight to that. So I personally love to trade crude oil. I've been trading it when I started as a prop trader over 11 years ago. Over the past 3-4 years, I've started trading the options on crude oil, and I'll kind of talk about why here as we get into it. So let's kind of talk about the chart first, and then we'll get into the dynamics of actually what I did today, talk about the market a little bit, and kind of go from there. So last week, I was actually long this contract, pulled back a little bit on this, and then we had this massive rally, basically the last week in the marketplace. So we really tested these 6150s pretty well, took off. I woke up this morning. First thing I do is kind of, bad habit, check the phone to see what's going on with the markets. This thing was noticeably higher. It was close to about 3% of the day before the actual cash session opened up. So this thing rallied pretty darn well into what I would consider a resistance area. So one of the things I like about trading oil, if you've never traded this market, is it's super, super volatile. And the reason that is, and there's quite a few reasons, but the main reason is the way it trades. You're not going to get on the order book, 1,000 lot bid and ask, or on the buy and sell side rather, orders. You're going to get, 50 lots, 20, 100, so that the order book is very, very thin when you look at this market. So when it's thin, it has the ability to move really, really well, right? So when you trade options or any kind of derivative product in general, I really like the ability when the underlying product, in this case oil, has the ability to move extremely well because it has a greater effect on change on the actual option. So I really like this market. I'm not against trading the actual futures contract. I trade those too, but there's days like today or this week rather where I'm going to be pretty busy. I don't have the time to sit in front of the computer and trade the actual crude contract. Okay. Now there is the mini crude contract, which I'm a big fan of as well, but this gives me the ability to put a trade on and I have to sit there and watch it. So technically, this thing got into what I would consider kind of a sell zone. Okay, so whenever I see massive rallies or massive sell-offs in crude oil, I get excited. Okay, because when it gets to price levels, the reaction of certain price areas, whether it's support or resistance, tends to do extremely well. Okay, so waking up this morning and seeing that, I know I had a potential to possibly get short, which I'll show you here in just a second. So earlier this morning, we actually rallied higher. This was previous high of day. And we kind of had a move above the range. Okay, so what we're seeing here this morning is what's called a range reversal, meaning price was above the range and you're actually reversing back into it. Okay, so it tested previous high a day. You've got a price gap here. Ideally, I do think if we break down here into the afternoon session, we probably end up seeing like 65.50s. Okay, so this would be considered support 1, which is why that's kind of noted there. And my second support level is noted there. Okay, so if you're looking at my screen, I don't have a ton of indicators on here, right? I'm using support resistance concepts and markets to understand where I think price will head to. Okay, so coming into this morning, I want to say probably about 9 a.m. Eastern, I got short this market, and I'm going to show you the actual trade I put on here in a second and kind of talk about it. So I got short this market. We scalp oil too much just because I want to look for like $1 or $2 or $3 moves to trade this because it's beneficial in the options market. So what actually did I trade? Let me talk to you about that. And I'll show you here. This is on my phone because most of the time I trade the options through the phone through the broker. Okay, so I had 2 at 70. So this is basically $700 a contract. They traded to about 106 a contract, and I'll show you the actual position. So these are the 65.50 put options that expire on this. So I sold one of them. I still have one in my book right now. I'm hoping to sell that one out at 150. So hopefully I can make about $800 in that second contract. So again, and I'll give you some insights to the way these dynamics of these markets work, right? So if I can sell the second contract at about $1.50, that's kind of my target on it. It also depends where the underlying is going to trade. And I bought it at 70 on this. I've got a tight little spread on this, so right, so it's about 80-cent spreads, right? So it's about $800 gain on one contract. Okay, so from this perspective, I don't have to sit there, and I'll show you why I like it in a second. I don't have to sit there and babysit this position over and over and over. Okay, so let me actually pull up the contract here, show you what that looks like, and kind of show you some structure. Let's see if I can pull it up here, and we'll discuss the 65.50s. Okay, And let's just draw this here. And there we go. Okay, so again, I'm going to see if I can't get this to 150 a contract. So this morning, these were at 650 bucks a contract on this move, right? So this move this morning down there is pretty swift move, right? This is why I like oil, because again, when the bottom drops out or it rallies, it's not like, if you've ever traded bonds before, bonds take forever to move. This thing moves really, really quickly. So the bottom kind of fell out, and it affects the rate of change on these options. Okay, so these got up pretty strong. So I sold one, and I want to see if I can't get the next one. Again, price target on Slick. We'll see if I can get there. I'd like to get it for 150. That might change, but again, at least I covered the cost on this right now. So I put a little bit of change in my pocket. Okay, so let me give you some more insight to this. Why do I like trading crude oil options, right? And let me just show you literally right here. This is a big preference for those who struggle with trading options in general, or futures rather. This bounce from 67.40 came all the way back here to about 67.80, okay? For some people that are new to futures, especially crude oil, a 40-cent bounce represents $400 in one contract, okay? That's very tough to stomach, especially if you're trading 2, 3, 4 contracts. On this bounce, the high of this is 104 a contract, right? It only moved back to 92 cents. Okay, so this only moved $120. So basically, from 94 to 92, right, is a $12 move. Well, that equates to 120 bucks on this particular, the way this contract is constructed, 120 bucks. Okay, if I was short a one lot in this bounce, and I'm net positive 400, and my P&L swings 400 bucks, that's tough to stomach for a lot of people. Okay, so for this, when I look at the markets, when I look at larger dollar plays, and again, I do think right now, and again, I could be wrong, but we'll see. I do think, based on this scenario, this might even be able to trade back to 65s. Okay, so imagine that for those of you who trade crude oil contracts, trying to hold a move from here all the way to here. It's a $3 move. I used to struggle with that years ago, holding really past $1 on oil, because you see your P&L blow up. It's tough to sit through the swings. So what I did is I said, look, if I can ever see a larger dollar move, how can I structure this idea to take advantage of a larger dollar price move? Now, one of those ways is obviously through trading the options contract beneath this. Okay. Now I'm going to take this one more step, and I'll kind of end the video here and give you guys some more insights where to learn more on this. There are situations where I might hold this one contract, and then I might even come here at the close today and actually trade the crude oil futures contract. Okay. I call this a core position for a swing, and then I can scalp the short-term actual futures contract while trying to hold for a larger dollar move. Okay, so that's a little bit insight to this trade today. I thought it was pretty interesting to see it. A lot of it's really based around options trading on equities, but again, I look for scenarios like this in the especially the options market to try to find situations where I can get big dollar moves, so it justifies me trading the actual futures contract below it. So that being said, look, if you have questions on this stuff, I created a pretty in-depth course on this called Fast Futures Options. So if you go to our website, this goes into a full course to teach you actually how to trade crude oil options, right? And it's really not that long. I really talk about the in-depths of this. Again, if you struggle with trading crude oil, if you've never traded it, if you work a lot, you don't want to have to watch the markets. Again, margin. It's an interesting product to look at. If you have questions on this, make sure to ask them on the comment section below. As we get more futures trades in the crude oil markets, I'll try to produce them. But again, I don't scalp a lot. I look for larger moves. So that's why some of these videos are far and few. So that being said, thanks for watching. Make sure to like, subscribe, and I'll see you guys in the next video.